Hi, this is Sive Morten with the daily update on EURUFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look finally on the euro currency today. So just a few hours stands till the Fed meeting results and the starting of the press conference of the Yellen. So it will be a really important moment for markets across the board. On the euro currency, actually you can see price behavior was not really very active. Recent sessions are understandable because markets just waiting for results of the Fed meeting and what Fed will say on the perspective of the United States economy and perspective of the rate increasing and so on. The same we see not only on the euro currency but also on the dollar index, and here is just a few moments that we need to clarify. First of all, guys, although we mostly have expected that the market should continue move slightly higher and hit 120 area before this deep retracement will start, in the current deep retracement it's nothing curious, because yes, initially we thought that probably it's minor reverse hand shoulders should be formed, so we initially treated the hand shoulders this action as the right shoulder, right? So the market not quite reached the AB equals CD target, although on the dollar index this AB CD pattern has been completed. Right now we could speak on the large pattern, so where we will treat this as a left shoulder and that is a right shoulder. From that standpoint, the depth of the shoulder is approximately the same. But even with no relation to the hand shoulders pattern, the deep retracement here is normal situation, because when the market is forming the bullish reversal swing, so you can see this upper direction is greater than the previous swing down, the normal consequence of that is the deep retracement. This is explained by the just contradiction between the momentums. So here we have the strong bearish momentum. When the market breaks this momentum, turns up, the rest of the momentum pushes the market, and that leads to the deep retracement. This is just how market moves. That's why in a drop to the 117, we should not treat it as the failure of all bullish setups and that market has no chance anymore to continue move higher. This is not quite so. Here I do not try to predict what Fed will say. So of course if Fed will say something really supportive for the United States dollar and hawkish comments will follow, of course market will drop probably. But from the technical point of view, this retracement doesn't mean that all bullish stuff has failed. So that is normal. Yes, we thought that maybe this retracement will be not as deep, some kind of the minor ABCD as it was here. But as market has turned to the deep action, well, this really also could happen, and currently we should not think that this is just a collapse and ending of all hopes for the bulls. Market currently stands very close to the 1710 major fib support, weekly pivot support 1, so another support area stands here. So if upper direction will start, probably it should start from that level. On the 4-hour time frame chart, guys, actually you see the reason why these kind of thoughts could appear now ahead. So I mean that the bullish stop probably has failed, because initially we put in the foundation as the cornerstone of our analysis this Gartner's 222 buy pattern, and that would be perfect if market would start upward action by this pattern. It just makes the overall setup really perfect. With having this pattern on your back when you trade this, it's just very good. But the truth stands so that the failure of this 222, or the market will not form this 222, will not mean that the bullish setup can't work. That's the real truth here. That's why just do not stick your mind with only with this pattern. So if even it will drop slightly lower below these lows, yes, we will not get this 222 buy, but This will be normal action. So here market right now is forming the butterfly. As you can see, we have the bullish divergence, hidden bullish divergence with the MACD. In this part, we have minor divergence as well. And the chance that market really could turn a bit down is existence of the XLP target. So we have inner APC top pattern, 1618 extension stands below these lows. And when we start the discussion of this pattern, we have talked about this. That's if market really turned to the deep retracement, the 222 could fail because we have the ABCD target that stands below these lows. But at the same time, this target 1690 stands in agreement with the daily fib support and weekly pivot support point. So it creates a real support area where market could start upward action if, of course, the Fed decision will be supportive to this action. Another pattern that market is forming here is butterfly, but maybe this will be a 222 buy. It's also possible. For example, if market will show some retracement, not know, this market could form. Well, for 222 it needs very deep retracement, so probably it's only butterfly. So here is butterfly is forming, and maybe market will finalize this downward action by the butterfly and turn to the upside. This is also possible. Approximately the same picture we see on the 4-hour time frame chart of the dollar index. So you can see that's our large hand shoulders. It has a bit more clear shape compared to what we have on the euro currency. It's more harmonic, not as sharp as on the euro currency. Market, take a look here, has finalized this 1618 target already compared to euro currency and has formed the butterfly. So it's approximately the same situation. But here we also haven't got our 222 sell that we have discussed in our weekly research, because market has shown, yes, this is not a leg up, just to complete 1618 extension. But at the same time, as you can see, this top stands in agreement with this top. The top of the left shoulder and also this previous support resistance area stands in the same level. So that's why here is also, we can't say that our hand shoulders has failed. Only if market will break it up and continue move higher right to the top of the head, we could say that yes, probably the bullish scenario will not work, but it's really strong reasons needs to be announced for that. So one of them is the Fed meeting results. So on the hourly chart, guys, market shows the breakout, upper breakout of this channel, retesting, but here, guys, by taking a look at this drop, it was really fast. And the fact that market hasn't quite reached the XLP target, it's currently it's really significant risk to go long, take the long position, because market here also is forming some kind of the godless triple to sell. If you will take a look at the 15-minute chart, as you can see here, minor butterfly could be formed just to finalize this pattern, and the market could continue move down. I'm not sure that's definitely will be a significant drop, but this is bearish, potential bearish pattern, and theoretically there exist chances that market will drop here lower just to complete the XLP target. Maybe this will happen directly on the press conference of the Yellen in the evening. So that's been said, on the euro currency, guys, market stands around the culmination point, so maybe some volatility could come and lead to completion of all the targets that stands uncompleted yet. But still, market stands very close to the point where the destiny should be determined. So this will be either real working of all bullish setup that we have, I mean the hand shoulders on the dollar index, reverse hand shoulders on the euro currency, and final action to the 120 area, or if Fed comments really will be hawkish and surprising for markets from the hawkish point of view, this really could become the collapse, and this will lead probably to the failure of the bullish setup on the euro currency and the failure of the bearish setup here. So these hand shoulders probably will not work, and market will continue move high. So market stands very close to the point where it should be determined. So if you would like to take the position in advance of the Fed meeting, for example, you would like to go long, in this case your stop probably should be somewhere below these targets, because if on volatility market will hit this target, it will not mean that overall stop has failed. Only if market will break this area and starts to move down below the major 618 support here, this will probably mean that everything is over here for the bulls, and downward action will start to become deeper. That's why you need to calculate whether it's acceptable for you. This relatively far stop should be placed, or wait how situation will develop. Maybe market prior to the Fed meeting will show some deeper action on volatility on the speculating shaking the market ahead of the Fed meeting. So let your opportunity to take the position with the better price. If you would like to take the bearish position, here is two solutions. So you could wait when the Fed will bring the results of the meeting, or place some stop entry order on the selling. Market will start breaking this area. You could try and take the short position. But overall, this trading around Fed meeting is definitely will bring more risk because volatility, some fake breakout spikes, so it could lead to really undecisive, unwelcome results. So that's why it's up to you whether you trade such events or not.